Not those of WPSL. WPSL does not endorse products that may be mentioned. Any reproduction or retransmission of this broadcast is strictly prohibited without written consent of WPSL. It's time now for the Real Estate Pros Show. With the latest information from Jeff Rubin of Rescue Florida Realty, James Canada of Mortgage Plus Financial, Phil Resnick of Chapman and Primal Law, and experts from around the world. Call in with your questions and comments at 340-1590. Now, here's your host.
And good morning. Happy Valentine's Day to everyone. And it's actually probably a pretty good Valentine's Day if you are looking at this information that I have obtained or what you're going to hear on the show today about this $25 billion mortgage settlement that we've been talking about for the last few weeks. I have some details, although they're, I'd say, preliminary, because the official announcement, I like the way that is, the official announcement, will be coming out soon enough. But I was able to obtain an executive summary.
Do you have a direct line in with the president or something? Because I can't believe I've had so many people call my office asking for information on this, and I tell them, quite frankly, you probably ought to.
You still have the unofficial summary.
Oh,
unofficial. What was that?
This is the unofficial, official, preliminary, double secret probation executive summary, and I actually have a website to link that if you go to.
Is that official?
I can't tell you. I'm sorry.
I have the Cliff Notes version, so yeah.
It's very interesting reading. I haven't really had the chance to read through all of it because I just received it this morning. But what I have read is encouraging. I'm a little skeptical. Shocking, I know. But you'll be able to read it for yourself. Eventually, we'll get it up on the Rescue Florida Realty website. That's rescuefloridarealty.com. Right now, if you go there and you click on the tab that says Mortgage Settlement, you can at least read a little bit of an article that has a basic outline, and we will be putting the actual details on that website as well as there's a link to the National Mortgage Settlement website that will have all sorts of contact information, including all of the attorneys general's offices that were involved in this. 49 of the 50 states came in on this deal, and
wow.
I find it interesting. You know, we talked about the money. We talked about if that's going to be enough, and most of the critics, and there's a lot of them, feel that this isn't enough. Other people obviously have other thoughts in regards to that, in terms of whether we should even be doing any of this. And
well, if it's not enough, I mean, I guess people might think the same way I am. If it's not enough, then why bother? You know, then don't waste what you already got. We're not wasting to a better use.
This whole settlement is out of the blatant disregard for the legal system that the banks had. The robo-signing issue really was the thing that pushed this into this type of level. And to give you an idea.
Well, time out there. So to be clear, then the settlement is not coming from the taxpayer.
Not directly, no.
Right. So it's coming from the banks and the insurance companies of the banks.
Correct.
So on that side, it's not like, you know, where you look at the other federal programs that are going out there, you know, you get the argument, some people saying, hey, you know what, I pay my mortgage on time. I go ahead and I work hard to do it. Why do I have to pay and contribute to somebody else? And not, again, that percentage of people I'm talking about that is very minute, that says, I truly am struggling, versus a lot of people say, I'm going to jump on a bandwagon, I'm not going to pay anything.
But
that's
lately,
not taxpayers.
All we do is pay for other things, because if you look at any of your insurance policies, you're kicking into Citizens every policy you have. So we are paying for that safety net for Citizens, well, even though we're not customers of Citizens.
If you think that the general public is not going to
pay
for this down the road somehow, some way, then you're really naive.
Where else would it come from?
Well,
it's not coming from the taxpayers directly in terms of from the federal government.
From taxes.
Right now.
Right.
But it is definitely going to come from all of us that do banking and financing and all that kind of
stuff. But if you say insurance companies, then that means to me that somewhere somebody's paying for policies,
exactly,
and those will go up.
Jamie Dimon, who's the CEO of Chase, A couple years back when they were talking about doing the HARP program, the HAMP program, all the federal tax money that was going to be allocated to it, and it was going to be coming from the banks. Jamie Dimon made a great comment. He turned around and goes, okay, well, I guess I'll just have to charge more for burgers and fries. So, and what he's saying is, okay, you want to have a checking account with me? Now it's free. Well, maybe $10 a month now. You know, and it's, I'm not saying that's going to be the case, but you get what I'm pointing to. So indirectly, Jeff,
right.
you're
Well, eventually it's all going to be paid by someone.
Right.
The banks are not just going to do it by themselves. However, that being said, this is the largest financial recovery obtained by the attorneys generals since the 1998 Master Tobacco Settlement.
Oh,
so this is a huge settlement, and what we have to remember is that there was a blatant disregard for the legal system by these banks, by their executives, by the companies that they hired. And that's something else that we can get into down the road here on this. But what is interesting is what I found buried in some of this executive summary is that the states actually are still going to retain the right to seek civil cases, and there's still going to be the possibility of class action lawsuits against the lenders. So they aren't getting away with just writing a check and walking away. But what they haven't failed to say...
It's a lot of money, though.
Yeah, but what they haven't failed to say here, and I find sort of interesting, is there's something that's from the Wall Street Journal. It says the legal releases. A separate document specifies which claims the state attorneys general and federal officials have agreed to release. Also included in the final deal are terms spelling out what powers are given to the independent monitor overseeing the deal and rights of action for states if banks are found to run afoul of the terms. So there's going to be an independent authority that's going to be overseeing this. And somewhere in here, and I don't remember where exactly I saw it, but the banks have to consent through the courts to allow this independent authority to have that right and to be able to exercise it through the courts. So that's not going to be just somebody saying, well, they did this wrong and no one listening. They're going to have the ability to actually take them into court and fine them somehow. Again, I'm skeptical.
That doesn't help the people either.
You're getting all choked up over this.
Yeah, I know.
It doesn't help the people. Does this deal help the people? Yes, there's a lot of things in here that will help. It's still going to fall short because it's a big mess.
So they're in trouble because of the robo-signing.
Yeah.
But now the thing is, nobody's going back a little farther and looking at all the signing that was going on in order to get these people into these houses in the beginning.
No. But one of the things they are looking at, and it's not even really part of this, there's an independent, another independent deal that's going on right now that they're changing some of the other practices in terms of mortgages and the servicing, and even like the forced insurance whole thing that people I'm sure are all aware of, that if you don't pay your insurance or your insurance lapses, the bank is going to place insurance on you, which typically is
it's not really an insurance policy either.
Thousands and thousands of dollars more than what you typically would pay. And the question is who's actually getting that money, because they're finding some insurance company that's charging you $5,000.
No, I think they're self-insuring.
Well,
they are the insurance company.
That's going to change also. That is definitely going to change.
One of the things when you go back to say, well, who wrote the mortgages? A lot of those companies that did write those mortgages are not going to be included in the settlement. Why? They're in business. Because they wrote that. I mean, so what's their penalty? They lost a ton of money to the point where they were absorbed by another company, or just went out of business. And look at a Lehman Brothers. That's granted. They were buying bad mortgages in the secondary markets, but Bear Stearns, same thing. When these major financial institutions went down, it just caused tremendous hurt in our economy. When AIG, when they were struggling to come down, I heard so many people saying, why is the government stepping in to help them? And they made, and rightfully so, I don't know if they properly.
It was their pension fund.
Granted, it was pension fund, but if that went down, there would have been a meltdown in this country. So I think from the outside, it's easy to throw a rock and say, no, I don't agree with that. But look at the ramifications if they didn't help. It could have really, it would have hurt their pensions, but it would have hurt all of us.
I think we had a meltdown either way.
Oh, no, we did.
And I think that unfortunately, the powers that be, or the powers that were, they did a lot of things to help certain people on the high end, but they
In
forgot
other words,
about
they
the people.
saved themselves.
Yeah, they forgot about the people down
Right.
below.
Mm-hmm.
And it, was supposed to trickle down. I'm sorry, it's sort of somewhere got caught in a basin and never really went down.
This looks like it's keeping lawyers really busy.
Well, it's going to keep I think it's going to keep a lot of people busy. And what I'd also like to say is, if you have thoughts on this or any questions about this, we encourage you to call in at 340-1590. That's 340-1590. Any questions? Are you behind on your mortgage? If you have any questions how this might affect you, if you've had any problems with your lender, your servicer, or if you're looking to refinance, you're looking to purchase, is this a good time to buy? Is it a good time to sell if you're not behind in your mortgage and your current? How does this affect you? So again, 340-1590.
Well, yeah, because later in the show when we get through this, I got to tell you, for those looking to buy a home, it is a great time. 2012 started off well, but we'll get to that.
Now, one of the things that I found interesting was it says here in the executive summary, the official, unofficial, official executive summary, double secret probation.
The one that's out now.
Yes. Well,
The version that's out now.
yes, the version that's out now. It says, while the robo-signing issue received the most attention, and rightfully so, because it was fraud, that's something that if you or I did,
The F word.
we would
I
get
just
in a
think
lot of trouble.
Martha Stewart always comes to mind, and the little thing that she did.
Oops.
Uh-oh.
While the robo-signing issue received the most attention, other servicer-related problems were identified. That's an understatement. Including deceptive practices in the offering of loan modifications. For example, telling consumers that a loan modification was imminent while simultaneously foreclosing. Now, that is a big problem that I run into every day at Rescue Florida Realty. We have people that are promised loan mods that don't get them, then find themselves served with foreclosure papers, and then they are looking to short sale their home at that point because the clock is ticking. They have to go find some legal advice. They go to an attorney, whether it's Phil Resnick or someone else, and they have to defend their rights so they can sort of slow the process down. So slowing the process down by defending your rights only slows the recovery too. But it's something that I encourage everyone to do because it is your right, and if you don't fight back or at least defend your rights, you're going to lose through a default judgment. And that's only going to speed things up, and you're going to be looking for a house to live in a lot sooner and probably lose the house through foreclosure, which will hurt your credit ultimately a lot harder than a short sale. But what we're looking at is what is going on is that the legal department at the servicers or lenders and the loss mitigation department, which is the department that handles modifications and other types of settlements, whether it's a short sale or other, they don't talk to each other. They don't talk to each other. I know this. They can look in a computer all day long, and one will just move forward with the foreclosure, and the other one will move forward with the loss mitigation, and somehow it's like it's two different worlds, and they can't seem to have that, and I'm going to use the word again, logic that I keep using. It's logic that if you're pursuing a loss mitigation alternative to foreclosure, then why are you spending all that money on legal fees? And the banks would say, well, it's because we're hedging our bets because the percentages show that most of these people don't end up being able to work something out, and then we have to then
That's
engage
because
in
they're
doing
not
foreclosure.
helping those people work anything
Correct.
out.
And I 100% agree with you,
Yeah.
Right.
whether it's through a short sale or other. Now, what it's saying here, and I'll read some more, what it says here is the performance failures resulted in more than just poor customer service. Unnecessary foreclosures occurred due to failure to process homeowners' requests for modified payment plans. And where foreclosures should have been concluded, shoddy documentation led to protracted delays. This misconduct threatened the integrity of the legal system and had a negative impact on communities and the overall housing market. It only took them how many years to figure this out? Something that me as a professional and anyone else who's professional in this business right now has been seeing for years and been questioning for years. And hopefully now something is actually going to happen out of this because they've really done a good job, I think. Haven't read all of it yet. Don't know if this is the official or the unofficial official, but it is an executive summary that is actually out on the web, and it is, if you go to rescuefloridarealty.com and click on the link for the mortgage settlement, you'll see a website that you can go to and read this.
I'm
going
to go to Rescue Florida Realty and do it. I'm telling you, I'm not joking when I tell you I've had people call me up asking me details on this program. I can't find them. I can't find them anywhere. My answer to them is, you probably know as much information as I do. So this is actually refreshing that something updated is out there.
Well, the relief for struggling homeowners, and we were talking about this before we went on the air. And what was your question?
What is a struggling homeowner? That is my biggest concern with this entire process.
Well, if you ask a homeowner, they're going to say it's them.
Right. It doesn't matter who it is,
Exactly.
right?
Exactly.
Yeah, hey, I'm struggling to make the payment, and I've been current for the last 5 years.
Right.
Or, look, I'm struggling. I haven't made a payment in 18 months because I can't afford it.
Or lost their job and
Right.
they're treading water. Maybe they're making payments, but they're late.
What is a struggling homeowner? That is the million-dollar question.
Well, it doesn't really define that in here.
No, I'm
Not
sorry.
found yet.
The $25 billion
Well, it may
question. That's the $25
define the
billion question.
qualifying struggling homeowner.
Well, there is a lot of things in here that I think once I really get to the nitty-gritty of this, I'm going to write about it on my blog as well. But it says the settlement requires the 5 banks to allocate a total of $17 billion in assistance to borrowers who have the intent and ability to stay in their homes while making reasonable payments on their mortgage loans. At least 60% of the $17 billion must be allocated to reduce the principal balance of home loans for borrowers who are in default or at risk of default on their loan payments.
Right. So, reduce principal for people who aren't making the payment.
Right.
Okay.
You got that.
All right.
In addition
So
to
should
principal,
I stop making my payment?
Exactly. I was setting up Jeff
Well, we'll
with
get
a,
there. Hold
with a
on. There's
softball.
He didn't bite
There's
on
more
that
to
one.
it, you know. There's more to it. In addition to principal reductions, the banks must allocate funds approximately $5.2 billion for other forms of homeowner assistance. These options include the facilitation of short sales, which allow houses to be bought and sold when the mortgage balance exceeds the value of the property. Another program is unemployment payment forbearance, which will defer payments for homeowners who are between jobs. Other options for funding include relocation assistance for homeowners facing foreclosure, waiving of deficiency balances, and funding for remediation of blighted properties. This all sounds great, but
That's
is it
a
going to be
scary one
enough
for
money,
me.
though? Is it enough
That's a
money?
The
Terrible.
blighted one.
Well, there is a-
Who's going to be deciding which properties are blighted and what are they
Oh.
going to do?
Well, any investor that wants to buy a foreclosure is going to say it's a blighted
Of course.
property.
Right.
Okay, to answer your question,
Yeah.
what about the people that are paying their
Right.
mortgages?
Okay.
To assist homeowners who are not delinquent on their payments,
Making their payments current.
yes,
Struggling to make those payments
yes,
because
they're struggling homeowners,
All
but
right.
they're making their payments.
Okay.
But cannot refinance to
'Cause they're
lower
upside
rates
down. Okay.
because of negative equity. We don't have any of that in Florida, do we?
No.
Not in Port St Lucie.
No.
No,
No.
not Fort Pierce. No.
No,
Martin
it's not
County?
negative.
No.
Negative. It's just non-existent.
How about,
I mean, just
how about depressed equity? The banks must offer refinance programs totaling at least $3 billion.
Okay, so we'll let them refinance.
Yeah, but
Okay.
the banks will require to notify eligible homeowners of the availability of these programs.
So wait, so let
Oh wait, the bank's going to come to us?
Well, that's what they're saying. Yes, but let me
I'm sorry, I
just
have to
say
chuckle.
something that the banks were supposed to reach out to all the people that were in these types of situations already through HAMP and HAFA programs. But I can guarantee you that they didn't, because I could probably name 12 people off the top of my head, which I won't do on the air. 12 people that I know
it's a dozen.
that never got a single letter when the program was implemented that they were supposed to reach out. They were supposed to make an effort to reach out to them through the mail, through the phone, in person. I mean, I know a lot of people that had been contacted by their bank in all those manners, but I also know people that weren't.
Okay. So, but let me look again. I have if you haven't heard it in the tone of my voice and where I'm going with this, I have a huge problem with this. I'm a struggling homeowner because for whatever reasons, I am not paying my mortgage. My value is upside down, just like everybody else. But I don't have the ability to pay the full payment. All right, and the bank won't take partial payment, correct? They'll
Right.
take you pay all payment or no payment, and people, when they're faced with that option, will say, "I'll pay you nothing," in their home. And now you look at your way. The other side is, you look, the other guy is struggling just as much, but he's making those payments. You'll refinance that one fella. Okay, that's good. We're saving $100 to $200 a month. Excellent. That should help the situation. But on the end of the other individual who's upside down and not paying, you'll not only refinance him to save him that $100 to $200 a month, you'll lop off equity or principal balance. You'll lop off principal balance on that person's loan, but you won't do for the person who's been faithful to you.
Well,
Isn't that the way it's spelled out?
It's sounding like that, yes. Now,
I-
there's some other
bad.
interesting little
So
caveats.
it's going to matter. It's just going to depend on what pile of papers your paperwork ends up, because
No,
it's going to be
here's what's
these
gonna
guys are
happen.
going to get this and these guys are going to get this.
Now, again, in fairness, I haven't had a chance to read through a massive amount of paperwork on this. And again, this is an executive summary, and that means it's a summary, that there's going to be a lot more finer points and finer details that explain all of this that we may not be aware of or have in front of us right now. So to be fair to the banks and to this actual settlement, I'll say that I agree with you at this point on the surface, that that's the way it looks, because what it's also saying is, to be eligible, a borrower must be current on mortgage payments, have a loan-to-value ratio in excess of 100%, and must have a current interest rate in excess of 5.25%.
Is that under the one that was called struggling?
That's on the refinancing of underwater homes for people that are not delinquent.
Okay, so all right, but I don't understand. So then why would I continue to pay my mortgage? I would just stop, and then you know what's going to happen.
right, you
I'm gonna
become the
stop.
other group.
I'm going to become the other group.
Yeah.
That $17 billion is going to go away really
Yeah, it is.
fast.
Right.
And
It
guess
is.
what?
And,
I'm going to lose
that's
my
what we were
house.
talking about
Exactly.
last week when we talked about strategic defaults. This program potentially could push more people into defaulting strategically, but they got to be careful, because the banks start looking at your financials and they see that you got money. You may not qualify for any of this, so it could backfire on you. You got to be very careful, okay? Because this is not a game anymore. The federal government is cracking down big time on all these types of fraudulent behaviors, and there's going to be more oversight now.
Even from consumers.
Even from
Anyway,
consumers.
that's
That's correct. And also says the refinance rate must reduce monthly payments by at least $100.
Right, or there's no benefit.
Otherwise, there's no benefit of, and that's just sort of, well, common sense. But I hate to say that when we're talking about these things.
It's time to take the news break.
All right, we'll be back.
You're listening to the Real Estate Pro Show here on WPSL 1590. Back to your host, Jeff Rubin.
Thank you, Veronica. And again, happy Valentine's Day. And we encourage you to take part in the show by dialing 340-1590. That's 340-1590. And we were just trying to dismantle a little bit. And I say dismantle because I think that this thing here is very interesting. And it's just chock full of information. And I'm very skeptical that this is really going to happen with all the banks and their red tape having an oversight of this $25 billion mortgage settlement. And again, you can visit my website, which is rescuefloridarealty.com, and click on the tab that says mortgage settlement for more information on that, or you can call our office 323-2722. That's 323-2722. And we've been talking about this for most of the show now, and just I'm going to hit on a few more points, and then we're going to touch on some other things, and we'll probably be talking more about this next week because I'll have time to really decipher all of this. And some of this may change because, as I said earlier, it's the official double secret probation details.
Can you go to your bank and ask them about this?
You probably could, but they'd probably think you're speaking Chinese.
That's when people call me. They call me up, and I deal with a multitude of banks around the country. I truly am just kind of just going off of what we talked on here. It's very difficult to even find stuff. Searching the internet on it. Yeah,
so the bank's not going to come and say, you know what, there's this thing out there, you may qualify for
Well, they're
it.
supposed to
Let's
reach
go.
out.
Right.
I mean, like, there's pages in here that talk about...
They could easily send a link, like email a link.
I'm funny that you say that. There actually is...
They can call me when I'm late.
It says banks / servicers shall develop loan portals where borrowers can check at no cost the status of their loan modification. Housing counselors can communicate with banks and servicers. Banks and servicers shall update the status of pending loan modifications every 10 business days. Appeals process. After the bank or servicer denies a loan modification, homeowners have 30 days to request an appeal of the denial unless the denial is an ineligible mortgage, an ineligible property, or the offer was not accepted by borrower, or the loan was previously modified.
So in other words, no.
So basically, they've
Just no.
given themselves 4 loopholes and outs that pretty much cover everything.
Yeah, it's sunny, but there's a chance of showers.
Yeah. And of course, people always are complaining that the bank wants too much money for the property. They're still looking at it like it's 5 years ago or 6 years ago, and sometimes that is the case. I've run into that numerous occasions, and there's something that they call net present value, NPV, and it's basically what the calculation of what your home is worth right now. And it says that on here it says the NPV calculation denial, if you were denied because of the valuation of the home, and they're saying you're ineligible because your home is worth this, and it's worth too much money, let's say. It says the borrower can contest the property value used by the bank or servicer in the test by requesting a full appraisal.
Well,
that's good news for appraisers out there if you're listening,
But if you go back to the bank, I have to look at the bank's point of view on that one. You borrowed X amount of dollars. You still have your home.
Yeah.
And just because they didn't control the value, they only controlled the money.
Yeah.
So you took the loan, you have the house, you're supposed to pay it back.
Yeah, but if you're going to be part of this program and they are going to have to slice principals or do some type of refinance, they have to get a today's value to make sense. Otherwise, it's really not going to fix the problem. I understand what you're saying, and I don't think anyone could have the foresight that this was actually going to happen as bad as it did. But, it's not just the person that got the loan. It's the banks. It's the federal government. It's a lot of other people also that help push this along because there was hardly any restrictions. I mean, you could get a loan with nothing, with one single piece of paper if you had enough money to put down.
Every day in my mailbox during all of that, I was getting, refi your house, 125% of your value. You're eligible for this amount of money, and it was of course, the value of my house was up then too.
Yes, and where I come back to is the programs were available,
and they were hounding me to take a loan.
And hounding you to take a loan, but did anyone show up at your doorstep with a gun, put it to your head, and say, "You better sign this paper and take it"?
Of course not.
So it's
They did it mine. No, just kidding.
The consumer has to be part of the blame here, especially if you're one of the ones who continue to refinance your house and strip the equity out of it. Guess what? Now it comes down. What did you do with the money? I mean, if you were prudent with the money and, it shouldn't have been a problem. Okay, I lost the equity, but I have this high loan. Pay it back. Mm-hmm. It's a problem that I really struggle with this.
Years ago, though, the deal was, I'm going to borrow your money from Mr. Bank, and I'm going to buy this house. And the bank goes, okay, fine, here's my money. You're going to pay me. If you don't, I'm taking your house.
Correct.
Now, if that house had the value today that it had when you bought it, the bank wouldn't be griping about anything. They'd be taking it back and selling it.
Gladly.
But it's because of the value that they're not worth anything anymore. The homeowner can't pay for it, and the bank doesn't want it.
And the homeowner should have never taken out the loan in the begin with. I know.
But the bank said I could.
No, doesn't matter.
They told me I qualified.
But the bank doesn't know your personal situation.
Okay, exactly.
But what about the landscaper in California who made $12,000 a year that got a $900,000 mortgage?
His mortgage broker should be in jail for lying on a federal form.
But there's a lot of that went out there. And, here's the thing. And I don't disagree with you. I struggle with this stuff, too.
Wait, time out. Let's go back to that. Because I ran into this actually with a family member, and she doesn't talk to me to this day over it. They had a fence company. They probably made, realistically, off paper, 50, 60 grand a year. Yet when they show on their taxes, they make almost 12 to 15,000. Yet they bought a $600,000 house. How can that be?
Well, they knew they could make the payment.
And now, they can make the payment. Okay, that was their choice and their responsibility as a responsible human being. You know you could pay this. You're agreeing to pay it. Pay it. Well, now it blows up in their face. They're upside down, ridiculous.
Well, everyone's upside down.
Well, no, this is up in Jersey. But they turn around now and say, well, that crooked loan person. Okay, you signed a federal form that said on there your income was blank, $150,000 a year. Was it? Well, I couldn't say that. I don't declare it on my taxes. Well, then that's why you shouldn't have got that loan. That's why. I have a huge problem with the consumer not taking some part of the responsibility. And then we got to go and get all these different programs to bail everybody out when there are a small fraction of people who truly need help. A lot of the people need to actually go get a mirror and look at it and say, you're part of the problem. And that's the mindset of America. Look at the credit card debt we have in this country. People use their homes as an ATM to just refinance, take the money out, and what they do with it? They bought boats.
Big screens.
They bought big screens. They went on vacations. Oh, shoot. There's no jobs anymore. How am I going to pay this all back? Oh, well, I lost my house. This is terrible. This is where I live. I understand that, but you should have thought about that. Did you take the money and go build a 3 to 6 month reserve like every prudent financial advisor out there is going to tell you to do? No, they didn't. Did you take that money and maybe invest it for a rainy day somewhere and put it away? No, you took it and squandered it on your own lusts.
And there's a lot of people that have done that, but there's also a lot of people that did exactly what you said, and they put money away.
And those
people ended up losing their jobs, or their businesses failed, and they had to use that money to live on. And
or their 401k was worth less than half of what they
reached out to their lender before, and we're going back years now, 4 years ago, let's say, or 3 years ago, and they reached out to their lender at that point, and they said, help, I'm making my payments, but I'm running out of money, and I need help. And what did the servicer or the lender tell them? I'm sorry, we can't help you unless you're behind.
Right. And that was bad. I ran into that with a woman. I helped her get her mortgage. She lives in our community. She's a manager at a major business in our community. Single mom, 2 kids. She saved up and put down, it was a chunk of money, upside down the house. She calls up the lender, just like you said, went through savings to try to stay there. And the bank told her flat out, you can't do this. You got to go. You can't apply for a modification unless you're behind. She misses one payment, just felt like, this is wrong. Calls me up. As I'm doing the refinance for her, and it was hard, but we actually did it and got it done. She turns around and gets declined by the mortgage company. Imagine if she just stopped paying not the mortgage, the bank declined her. Imagine if she stopped paying altogether. She would have lost her home because of some bad advice from a bank. And that's why I don't disagree with the $25 billion coming out of a bank's pocket.
Right. And one of the things that is in this agreement are new servicing standards. And what it says here is that they're supposed to increase the transparency of the loss mitigation process and impose timelines to respond to the borrowers and restrict unfair practice of dual tracking. And well, dual tracking is something that we just referred to earlier in the show, which is when you're going to be served with a foreclosure at the same time that you're trying to do a modification or a short sale or some type of other remedy that the bank is aware of and is working on at the same time.
It should be the same department, actually. Those people should be working together. If you're working someone to modify it, there should be someone from that foreclosure department who knows that there's a modification on that particular property.
And it's easier said than done because it's such a, legal is different from loss mitigation.
And they're probably not even in the same town.
No, well, it's not even probably in the same state.
Right.
But what you have to understand is that the banks are not set up. Reading through this, the banks are not set up to handle a lot of this. They're going to have to staff, which is good for the economy,
right?
By the way, if they hire qualified individuals, and there's a lot of people that are qualified that know real estate, know mortgages, know finance, that are out there who need jobs. But what the bank is doing is hiring collectors to work in the loss mitigation departments. I know this firsthand. And the people, they act like collectors. And all they want to do is delay, and argue. And again, I'll use those two words, common sense. It doesn't work like that. So there's a little line here that says banks must maintain adequate, don't know what the definition of adequate is for them, trained staff, don't know what that definition means either, to handle the demand for loss mitigation relief.
So they're being told to hire some people who can handle this.
They're being told.
And they should, because that'll help clean up the clog.
Now I have a question on this money too. Because it's coming from the banks, is it coming out of the bailout?
That's a good question.
Is it part of that?
It's probably...
So then it comes back to being taxpayer money.
Well, you see, a lot of these banks have already paid all that back a long time ago.
Okay.
And essentially that money was supposed to be used to trickle down, if you remember what I was saying earlier, trickle down to lend out to small businesses and to homeowners and try to stimulate the economy. Well, most of the banks didn't do that. Now, they have statistics that show that they did lend. But if you look into the Treasury Department and their statistics, or the Federal Reserve and their statistics, you'll see that they didn't really lend during that period when they had that money. So what did they do with that money? Well, they probably invested it in other things. They factored that money at, by the way, taxpayer money given to them at 0% interest.
Right.
0% interest. And they
billions
of dollars that they invested, they made money on, they paid back to the government, because at that point the government was saying, if you're going to keep this money, we're going to need to see your books a little bit closer. We're going to need some seats on the board. And that's when the bank said, you know what? Here's your money back. We're done. We have taken care of this. Here's your money back. We've paid the loan, and we're using that stimulus money, whatever they're going to say. And what's basically happened is, I think that they factored that money, and again, I don't know this for sure. This is just my theory. They factored that money, and so some of that money is now being used to fund this program. Is that good or bad? Does it really make a difference where the money came from in that point? Probably not. But in the end, it probably was taxpayer money that funded this.
Sure.
I don't know.
I don't know.
I don't know either. But there's a couple of things I just want to touch on, and then we'll move on to we'll take a break and we'll move on to something else. There's a thing here called release of claims that we discussed earlier.
What's that?
The release of claims. It's a proposed release contains a broad release of the bank's conduct related to mortgage loan servicing, foreclosure preparation, and mortgage loan origination services. claims based on these areas of past conduct by the banks cannot be brought by state attorneys general or banking regulators. So basically, they're saying now, what's in the past is in the past. We're going to move forward.
Okay.
That's sort of interesting. The release applies only to the named bank parties. So basically, they're saying if you weren't involved in this and you think you got away because you don't have to write the check, guess what? This doesn't cover you. So we can still come after you.
Okay. So there could be more money.
Yeah, there could be more money. It does not extend to third. This is where I think this is interesting, because as I see this, is that the companies that were employed, especially to do the robo-signing for the banks, are being hung out to dry now. It does not extend to third parties who may have provided default or foreclosure services for the banks. Notably, claims against MERS Corp. Or Mortgage Electronic Registration Systems Incorporated are not released. Now, why don't you explain what MERS is?
Do we have about 2 hours?
No.
No, okay. It's just a tracking system for the mortgage.
Right. If you go online and you look at any mortgage, it's going to have what they call a MERS number. And that MERS number is registered in a database and will tell the person that has access to that database who the investor is on the loan, who actually owns the loan ultimately, and who the servicer is on the loan. Okay, and when it was basically originated. So
in a very simple nutshell.
Yeah, it's a very it's very very simple. But
is this information that the homeowner can find?
Yes.
Yes.
Okay.
Yes.
Okay, good luck.
It's public information, but it's very difficult to find. It also doesn't release anything to do with the securitization of mortgages, which is a whole nother show. But basically, what it's doing is it's saying, well, the banks, they may be pursued, they may not be pursued, they retain their right to do so, but, definitely these third parties are not off the hook. But the third parties were hired by the banks, and the banking executives are the ones that told them to do it.
They said, here's what we need you to do.
Right. It's not like they came to them and said, hey, we're going to do all this fraud for you. Is that okay?
But it's not like they didn't foreclose. They didn't foreclose on people's homes that weren't in foreclosure. It was the technique that was used to sign off on these foreclosures.
Now,
they were still foreclosures.
Right, but it expedited the process maybe unfairly to some of these people that could have had a modification or another alternative.
Okay.
But it was expedited because of fraudulent documentation.
See, and the way I just keep coming back to it again, and there is that percentage of people that, and it's a small percentage when you truly weigh it down as to who just kind of threw their hands up and said, I'm done and move on, or people truly wanted the help and needed the help. You buy a car. We all know you buy a $30,000 car, you drive off the lot. How much is the car worth? 25 now.
Yeah.
We know
or
that.
Less.
Okay, so you just took out a $30,000 loan to buy a car, and now it's 25.
Sure, and we accept that.
And you accept that. Well, was this any different?
No, it's just
You know,
like
I
buying
bought a
designer
house.
shoes too. I bought them this week at $200 for the pair of shoes, and 2 weeks from now they're on sale for $50.
Right.
Do I get a modification?
Right.
I don't.
That's now when I go to
What kind of paperwork did you fill out for that mod?
now I go and I take my car after 3 years. I'm bored of it. I want to go get another one. I decided, or I can't pay for it anymore, and I need to sell it. Well, James,
You're upside down.
You owe 20, and the car's worth 10 now. What do? Well, I have two options. Come take the car back, and it dings up and beats up my credit for a few years, but I will recover. It's not a life sentence. Or I continue to pay for the car, and I just go with that. I don't understand how, granted, there were a small amount of people that truly needed help, and those are the people that should be helped. Just like there was, this is no different. This happened in the past. Didn't we talk previously about people in the past who had problems, and they'd call up the bank, and the bank would say, all right, fine, no problem. You're out of work for the last 6 months. Let's take that money. We'll put it at the end of your loan.
Yes.
No questions asked. It's almost like the same day.
Yeah, but it's more predatory now. They want it now or else.
Okay, take your house. Now take that. Then now, you know what? There's really no problem in renting and getting life back together again. It's.
I don't think anyone in this room is going to dispute that. Inevitably, if you don't pay your mortgage, you're going to lose your house unless you can work something else to save it.
Right.
But the bottom line is there's a right way of doing things and a wrong way of doing things, and the banks have approached this the wrong way, and they've been doing it the wrong way for a long time because they, in my eyes, have looked upon this as this is not their problem, this is not their fault, but they have to take some of the blame for being involved in these things, because when people did need help in the beginning, they refused to do anything and made the problem worse. And logic and common
But they
sense
don't have
don't
to
really
do
play
anything.
into this.
They didn't. I'm a bank. I lend you $1. James, I can't pay you back. I don't care. It's my prerogative to say, okay, I forgive you the $1. The bank didn't have to do that.
Well, I understand that, but they're not in the real estate business. That they are now in the real estate business.
True, they are.
And
Well, it's
if
when they
we're
made
going
it
to
an
work
investment,
together
though.
if we're going to work together as a country, okay, and try to turn this economy around, everyone, unfortunately, is going to have to sacrifice. And it's not always the federal government that should do it. It's not always the big bank that should do it. Obviously, the public needs to do it too. But what ends up happening, in my eyes, again, what ends up happening is you force people out on the street, they become a burden on society either way. The federal government's going to have to do something for them then. I mean, at some point, you just have to realize that the way things are going, they don't work. And things have to change, and things are going to cost money to do that.
And all those empty houses are a liability as well.
Liability
for the
and
communities.
the tax issues that people are not paying their taxes, real estate taxes.
Does
I'm
the
talking
bank pay the taxes when the people are kicked out?
Yes, they're supposed
Okay.
to.
Yeah.
But do they?
But some of them don't, and some of them don't even maintain the houses.
See, now that's where I agree with you. All right, that consumer turns around, can't pay for the house, just like the car. You have the two options: you pay it or you give it back. I give the house back. The bank then should properly maintain the property. The property. There shouldn't be weeds growing up all over the place. And I don't care. They say, they allocate funds to do so. I can tell you 3 houses in my neighborhood.
No,
that
they're
just-
not going to cut that grass till they resell the house.
Right. They should be paying the taxes. That I agree. Now, it's a tough call because, at the end, you're looking at someone. Hey, well, so you're saying me and my kid should just go out on the road? No, I'm saying you should go and get a job and work for it. Well, there's no jobs available. Statistics are saying that's incorrect. The economy is recovering. Jobs, it's right here. Unemployment has dropped again.
I have to say that I know so many people who are on unemployment looking for jobs and have run out of unemployment and, are still looking for jobs.
And I could tell you so many people who say,
mean,
I can't do that. It's beneath me.
No, well, the thing is, they're knocking
I
on
just
doors.
came
They're
from
knocking on
McDonald's.
doors like
And
Home Depot and Walmart and
I
calls.
was just at Tropical Smoothie, and there's a sign on the window that says "Help Wanted." And I swear to you, I told someone this. She's 40 years old, hasn't worked in a year and a half. I'm not working there. I may run into people I know.
See, but she's got to have an income of some sort, because if you're out of money, you're going to take anything you can get.
She's got her hand out, and the government's sending her a check every month. So it's.
Yeah. Well, we're going to have a
That's
lot
a whole
to talk
nother
about
show.
next week again. Anyway, visit the website, rescuefloridarealty.com, for more information on what we were talking about today. And I'll be posting more information throughout the week as well. And we will be discussing this, I'm sure, again next week. Thank you for tuning in.
Thank you.